This is Don DeBartolo, a senior commodities broker with Daniels Trading in Chicago. I am also the publisher of the Trade Spotlight Advisory Service. Trade Spotlight is broken into three segments. You have the Trade Spotlight Futures, Trade Spotlight Commodity Options, and Trade Spotlight Future Spreads. This video is Beyond the Spotlight, which spotlights 2 or 3 different markets that may become trading opportunities for the week ahead. The week in question is starting with Monday, November 5th, 2018. Before we get into the charts, please take a moment to pause the video and read through the risk disclosures so that you understand the risks involved with futures and commodity options trading. Let me just give you a brief snapshot of what the Trade Spotlight Futures Advisory Service email looks like. This is sent directly to the email address that you provide. It'll have the timestamp so you know when the trade recommendation is sent out. Concise summary of the why behind the trade recommendation, the specific entry price for the trade in question, the initial margin requirement and maintenance margin if it's a futures contract, future spread, or writing a commodity option. The stop loss and target price is listed so you know the risk reward parameters before getting into a trade position, and the chart of the market in question. Okay, let's get into our first chart here. This is the March 2019 Kansas City wheat contract. Looking for an opportunity to sell this futures contract. You'll note right here, this is October 31st. That low was 510.5. That market did take out the previous low of this channel formation. I have drawn off here in between the gold lines, but it closed higher. It was a false breakout. So I'm waiting for an opportunity for to sell the contract on a close only below this lower trend line. Right now you can see the momentum shown here with the stochastic indicator is to the upside. So potentially this market will trade up to this level here where you have 2 different moving averages, a 20-day and a 50-day moving average. Perhaps, though, the market could continue higher into this next range here, where you have the 200-day moving average, which I have at 563.5 at the moment. So again, waiting for the market to close below this channel formation to take a short position. However, if the market continues higher and the stochastics shift, showing momentum to the upside, and the MACD shows a downshift in the trend, there could potentially be a short entry opportunity up in this level. Depending on where the trigger occurs, that would determine the potential stop loss. I've got this red line drawn off here off support that could potentially be a stop loss if the market turns around here and trades lower before getting into the second level. Potential target, I've drawn off a wave projection from this previous sell-off going back to the beginning of August through the middle of September. That wave projection is mirrored here, so we'd be looking at a target to about the 440, 430 price level. Okay, this next chart here is of the January 2019 OJ futures contract. Looking for an opportunity to get long this market. You can see we've been in a downtrend going back into about the middle of August here. I've got a 50% Fibonacci retracement, which comes in about the 153 level or so. There's also a 200-day moving average there at 153.99. So looking for the market to get back up into that level. But first, what we need to see is a shift in this MACD indicator to the upside and the momentum to show a bit stronger to the upside here. It does look like it's bullish here, but again, looking for a bigger jump in momentum to want to take a long entry, because as you can see, we've been in this long downtrend here for a while. We need some sort of confirmation that the market's turning around and heading higher. There is a seasonal to be long the orange juice futures contract going into November, December. But again, we want to wait for some sort of technical confirmation to turn around and get long. That 50% retracement would be a potential target for this trade. Again, about the 153, 154 price level. Stop loss can go below these current lows here. The lowest low looks to be about 136.75. That's from October 24th. You can also look at that bar right here on October 23rd. That low was 135.60. That'd be a bit more of a conservative stop loss below that low. The 12-month contract low just adds a little bit more risk to the trade. And the third chart of a market that I have on my radar for this week is the March 2019 sugar contract. Looking for an opportunity to actually sell the sugar contract. I've highlighted down here, though, that the momentum it looks like it's turning to the upside here. The trend is also showing that, but there's divergence. So there's kind of a mixed bag right now, or potential continuation to the upside in the sugar market, with a big rally starting here near the end of September through the middle of October. So, not rare for the market to take a pause, pull back. You see it pulled back to this 200-day moving average. That 200-day moving average comes in at 1303. So the market pulled back to that level. This low on this trading session here, that lowest low as of late, was 1308, and that's November 1st. So again, not rare for the market to pause, take a break, pull back. So looking for the market to continue up into this level, but not break this 12-month contract high. That 12-month contract high is now 1424. That's from October 24th. But looking for the market to get in this level, even if it trades sideways, takes its time to get up in that level, that would be a stronger confirmation. We'd have a double top formation. So this trade, may not occur for this week, but something definitely to keep an eye on this week. If the market turns around in a hurry and the indicators show that there's potential downside, because then there could be a trade opportunity on a break of that low that I mentioned, which was 1308, again from November 1st. And then downside targets, the 50% Fibonacci retracement of this last rally comes at about 1251. But ideally looking to get to the bottom of the range here. This low right here that you're looking at is the 1080 low from September 27th. So that would be the long-term target on this trade. If you have any questions about the charts that I discussed today, or just in general about the Trade Spotlight Advisory Service, I've listed my contact information, my local, my cell, and toll-free number. You're also welcome to email me directly at tradespotlight@danielstrading.com. If you are not a subscriber to the Trade Spotlight Advisory Service and you'd like to go ahead and do that today, just go to the firm's website, danielstrading.com. There are tabs that run across the top. Select Advisories, and then under Technical Analysis, you'll find the Trade Spotlight. It'll take you to this page here where you can view the Trade Spotlight and all of the segments. You can review the emails and the frequently asked questions. You can subscribe today. It's free trial for 90 days. If after that you'd like to continue, it's $99 a quarter. Unless you're a client of Daniel's Trading, then this is a free resource for you. So you just contact your Daniel's Trading broker and let them know you want to be on the Trade Spotlight Advisory Service, and they can help facilitate that for you. Thank you for taking the time to listen to me today, and happy trading.